According to Dion Rabouin from the Wall Street Journal, Americans have lost a staggering $603 billion in potential earnings over the past 8 years by merely storing their money in savings accounts at major banks like Wells Fargo and Bank of America instead of investing it. This startling figure sheds light on a common misconception, the belief that our money grows in bank accounts. In reality, while the numerical value of our savings might increase slightly due to interest, its actual purchasing power often diminishes in the face of rising inflation. This phenomenon turns our seemingly safe bank deposits into inadvertent financial pitfalls, subtly draining the value of our hard-earned money. This is a cash trap that many of us are caught in, and in this video, we're going to help you escape it. We'll introduce you to 6 ways to invest your money and avoid losing value. These are robust investment assets that can protect your wealth from this erosion, guiding you towards creating lasting, intergenerational wealth. So, make sure to watch the video until the end. If you're new to the channel, don't forget to subscribe and hit the bell icon so you won't miss any of our future videos. Now, let's dive into the first of these 6 strategies. First up, we're talking about what we like to call God's money. Yes, we're looking at gold, silver, and platinum. Now, why are these shiny metals so awesome? Imagine this. You're holding a dollar bill. Feels nice, right? But what if I told you that bill might not be worth the paper it's printed on tomorrow? Scary thought. Governments keep printing more money, and suddenly your hard-earned cash might just be good for a paper airplane. That's where our metallic trio steps in. They're like the rock stars of the investment world. Why? Because they're rare, valuable, and don't just appear out of thin air. The rich people know this secret. They always keep a slice of their pie in precious metals. When inflation decides to party hard, gold, silver, and platinum are the bouncers that keep your wealth safe. Back in the 1950s, an ounce of gold was like a $400 ticket to a rock concert. Fast forward to 2024, and it's like a VIP pass costing over $2,034. And guess what? Experts predict this ticket could soar to a whopping $11,000 by 2032. That means your gold could multiply 5 times in value while cash is just, well, hanging out. Now, it's true that not everyone wants to build a treasure chest in their backyard, right? No worries. You can still ride the gold wave with something called gold ETFs. They're like your golden ticket to the Willy Wonka chocolate factory of investments. Affordable, easy, and you don't need to worry about keeping bars of gold under your pillow. So that's our first superhero asset, to invest your money to avoid losing value. All right now, the second way to invest your money to avoid losing value is to invest in industrial commodities. You know, those raw materials that are more than just a pretty face. They're the unsung heroes of our everyday lives. Think about silver. It's not just for fancy jewelry or your grandma's antique spoons. Silver is like the Swiss Army knife of metals. It's in your smartphones, life-saving medical equipment, even nuclear reactors. It's everywhere. Now, silver's buddies, cobalt, nickel, and copper, are also pretty popular in their own right. They're like the cool kids at the industrial party because of their unique properties. You can't just swap them out like an old pair of shoes. They're special. And if we look at statistics, there are some eye-popping numbers. Since 2020, cobalt has been like the superstar of metals. Why? Well, it's got a VP pass to the electric vehicle revolution. It's crucial for making those batteries that power your eco-friendly rides. And guess what? The price of cobalt has zoomed from $20,000 per ton in 2012 to a jaw-dropping $50,000 in 2024. That's like turning a modest sedan into a luxury sports car in terms of value. 100% increase in just a decade. So you're thinking, great, but I can't exactly start hoarding cobalt in my garage, right? True. Storing raw materials isn't like keeping a collection of stamps. And that's where the magic of the stock market comes in. You can get a piece of this action by investing your money in stocks of mining giants like Rio Tinto, or dive into mining-focused mutual funds. In short, getting involved with industrial commodities is like having a golden, or should we say cobalt-tinted ticket to potentially boost your portfolio. It's not just about owning a piece of metal, it's about owning a piece of the future. And that, my friends, is what smart investing looks like. Moving forward, next is something that might not shine or have a physical form, but is super powerful. This is about investing in safe haven currencies. In this roller coaster world where money isn't backed by gold anymore, finding a stable place to park your wealth is like finding an oasis in a desert. And guess who's the champion of stability? Yep, the Swiss franc. It's like the Superman of currencies, always there to save the day during economic turmoil. Let's hop into our time machine and look at some real-life examples. Remember the Eurozone debt crisis in 2009 or the global financial crash in 2008? When these financial storms hit, money flowed into Switzerland like water into a sponge. Why? Because the Swiss franc is like a financial fortress, protecting wealth from the wild waves of currency depreciation. And the Swiss franc isn't just a local hero, it's an international superstar. Take the recent Russia-Ukraine crisis, for instance. When the US put its foot down on Russian energy trades, Russia turned to the Swiss franc for its transactions. This move was like a turbo boost for the Swiss franc, making its value soar sky high. Since 2010, the Swiss franc has been consistently outperforming the US dollar. Imagine a currency so strong that for over a decade, it's been like the heavyweight champion in the currency ring. As of now, one Swiss franc stands tall and proud at 1.16 US dollars. This enduring strength of the Swiss franc isn't just impressive, it's a testament to Switzerland's rock-solid economic and geopolitical stability. It's like Switzerland is the fortress, and the Swiss franc is its unbreakable shield, keeping wealth safe from the fiery dragons of economic instability and currency devaluation. Now you might be thinking, great, but I can't just stroll into a Swiss bank and open an account, right? True, we can't all be jet-setting to Switzerland, but don't worry, there's a smart workaround. Enter the world of currency ETFs and forex brokers like Forex.com. These platforms are like your golden ticket to the currency game. With as little as $100, you can start playing in the big leagues with currencies like the Swiss franc, British pound, and Chinese yuan. So when you're thinking about your investment strategy, remember the Swiss franc. It's a beacon of stability in a world of financial ups and downs. With options like currency ETFs and forex platforms, accessing this financial superhero is easier than ever, even if you're not swimming in a pool of cash. By the way, if you're enjoying the video so far and want more topics like this, comment the word "more" so I know. Coming into the next way to invest your money to avoid losing value. This time, we're exploring the concept of sovereign guarantee. Sounds like something out of a medieval tale, right? But it's actually a super important part of modern investing. Let's break it down. First things first, let's take a closer look at the humble dollar bill. You know, the one that's always in your wallet? It says, "This note is legal tender for all debts, public and private." Ever wondered what that means? Well, back in 1971, something big happened. President Nixon said goodbye to the gold standard, and suddenly the dollar wasn't backed by gold anymore. Instead, it became valuable just because the US government said so. It's like when your favorite superhero declares that a simple rock is now the most powerful object in the universe. Now here's where things get really interesting. No fiat currency, that's paper money, like dollars and euros, is backed by physical stuff like gold, but they're still valuable because they're backed by the full faith and credit of their governments. It's like a trust game where the currency is only as strong as the government behind it. This is why investing in something with a sovereign guarantee is seen as a smart way to invest your money. Governments are like the big, tough guardians of the financial world. They're usually the last ones to default on their debts. Think about it. If a government goes bankrupt, it's like the whole country hits a financial iceberg, and no captain wants to sink their own ship. That's why things like government securities or G-SECs are considered a pretty safe bet. But wait, there's a catch. Not all G-SECs are created equal. It's crucial to pick stable ones with good credit ratings. Remember the 2009 sovereign debt crisis in Greece? The IMF, Eurogroup, and ECB had to swoop in like financial superheroes to save the day. So always check a government's global strength before you invest in its G-SECs. It's like checking the weather before a big hike. Always be prepared. In the US, you can invest in treasury bills, notes, and bonds. These are like the golden tickets of the sovereign guarantee world. They usually offer better returns than just letting your money snooze in a bank account. That's the cash trap you want to avoid. Plus, they're backed by Uncle Sam's strength in the global economy. And here's some good news for the small investors out there. You don't need a pile of cash to get in on this action. You can buy Treasury securities directly from the government through the Treasury Direct portal or from the secondary market. It's like having a direct line to the financial powers that be. Overall, sovereign guarantees are a solid way to avoid losing value and make your money work for you. It's all about putting your trust in the big players, the governments, and reaping the rewards of their strength. All right, next up we have something a bit more dynamic: value stocks and mutual funds. This is where the investment party really starts to rock, and the stock market, it's like a big, bustling city with different neighborhoods. In one part, you've got growth stocks. Think high-tech, cutting-edge companies. These are like the trendy, up-and-coming areas. They're exciting, sure, but they come with a risk. Just like the hippest part of town might suddenly go out of style, these growth stocks can be a bit of a roller coaster because they're banking on ideas that might or might not take off. Then there's the other side of town, the value stocks. These are your more established, steady neighborhoods. They're not as flashy as the growth stock areas, but they've got a solid foundation. Value stocks are like the reliable old friends of the stock market. They deal in things we always need, like industrial metals. They're less risky because there's an established demand that's not going anywhere anytime soon. It's like investing in a classic car versus a prototype flying car. One's a sure thing, the other's a gamble. Now let's talk dividends. Value stocks are the kind that not only grow in value, but also pay you just for owning them. It's like owning a tree that drops money instead of leaves. These stocks provide stable price appreciation and a steady income stream. Who wouldn't want that? Now, researching each and every value stock to find the best ones can be as time-consuming as finding a needle in a haystack. It's a big world out there, and not everyone has the time to be a financial Sherlock Holmes. That's where dividend-focused mutual funds come into play, like the Vanguard High Dividend Yield Index Fund Admiral shares. They're like a curated playlist of all the greatest value stock hits. These funds have a history of paying out solid dividends, making them an ideal and affordable option for regular investors. It's a way to invest your money without falling into the cash trap of low returns. So, value stocks and mutual funds are a smart way to avoid losing value and keep your portfolio growing. It's about finding that sweet spot between risk and reward, and these investment options are like the Goldilocks of the financial world. Just right. Finally, the sixth way to invest your money to avoid losing value is land and real estate. This is like the ancient secret of the financial world, and why we don't consider land a depreciating asset, and there's a pretty good reason for that. It's the classic case of, they're not making any more of it. Land is as scarce as a perfect avocado at brunch, always in demand, and there's just not enough to go around. Since the dawn of time, land has been like the rock star of valuable resources. We need it for everything: homes, schools, factories, farms, and malls. And with the human population growing like a beanstalk, the demand for land is never going to drop. Now, let's shift our gaze to buildings, those homes, offices, and commercial spaces that stand proudly on this land. They're in constant demand, too. Together, land and real estate are like Batman and Robin in your investment portfolio, fighting off the villain known as inflation. And according to Bloomberg, housing prices have done a triple jump from 1992 to 2020. Sure, we had that scary dip during the 2008 housing bubble, but like a phoenix, real estate rose from the ashes. So, when the dollar starts to wobble like a poorly set jelly, real estate stands strong, helping you avoid losing value. Now, most people think of real estate as something to dive into later in life, like a retirement hobby. It's often seen as the big goal for your 40s, the fully paid-up home. But why wait? Getting a slice of the real estate pie is recommended at any age. And, against popular belief, you don't need a truckload of money to start. You can jump into the real estate pool with something called REITs, or real estate investment trusts. They're like mutual funds' cool cousin, but for real estate. One shining star in the world of REITs is Ventus, Inc. It's on the New York Stock Exchange under ticker VTR and focuses on healthcare real estate. Think senior housing, research facilities, hospitals, the works. It's a way to invest your money in real estate without buying a whole building. And for those who like a bit more adventure, how about owning rental properties? You don't need to be Scrooge McDuck to do this. Borrowing to own rental properties can be a smart move. The rent you collect can cover your expenses and mortgage payments, and even leave some profit in your pocket. It's like having a golden goose in your backyard. So there you have it, friends. Land and real estate, the age-old guardians of wealth. They're a fantastic way to keep your money growing and avoid falling into the cash trap. As we wrap up our journey through the world of investing, remember that it's not just about making money, it's about making smart choices. And that, dear friends, brings us to the end of our journey through the exciting world of investing today. But before you go, I've got a little something extra for you. Are you a fan of audiobooks? Because guess what? You can enjoy any audiobook for free. That's right. Just click on the link below the video, and you're all set for a world of knowledge at your fingertips. Plus, we've put together a list of suggested books and where you can buy them. You'll find all this right below the video. Now, a gentle reminder, the purpose of this video is purely educational. We're here to explore the vast universe of investing, but not to hand you a treasure map with an X marking the spot. Investing comes with its own set of risks and uncertainties, so always remember to do your own research and consult with the pros before making any financial decisions. Remember, the financial world is like the ocean, constantly changing. Past performance is no magic crystal ball for future results. Always weigh the risks before diving into any investments. If you found this video helpful, why not join me on my next adventure? I've got loads more insights and tips waiting for you. Don't forget to hit like, share, and subscribe to our channel. Your support means the world, and it's what keeps these videos coming. Thank you so much for watching, and I can't wait to see you in my next video. Until then, keep exploring, keep learning, and keep growing your wealth.